Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about STEM, in particular how they correlate to their earnings, which are going to be announced tomorrow after hours. That is February 16th, a Thursday. And this is following a day where they are currently up more or right at 8% with another 6 cents after hours. If you look at the weekly performance, that's basically break even. Again, they've continued to hang around that $10 mark. This is a big move going into earnings. In particular, if you look at total volume, that's a little bit right in line with average, if not a slight bit lower. And a large percentage of this is in tie out to a lot of other clean energy that is going up. You can see the other big one that was up today quite a bit was Tesla. On the past week, you've seen, or the past few days, you've seen a large increase there. So clean energy as a whole continues to do really, really well. Something that we're hoping to hear more on tomorrow is the correlation or the further potential capabilities of the tie-out between ChargePoint as well as STEM Energy. Remember that earlier this month, they did announce that they were going to have their joint e-mobility partnership. So the question is, if we go back to STEM, because they're up so much, is this something that we want to buy into at this point in time? Are we buying into these levels? If you look at STEM on a whole over the past year, the stock really hasn't moved. There have been big swings down, big swings up. Again, stock at highs of 1742, at lows of in the $6 range. I think it actually touched $6. There was some big buy action there. So the stock over the past year is basically break even. However, we're up 8% on the day. So the question is, what's going on? What are we looking for on a go-forward basis? For that information, I'm going to revert to their presentation that they provided in January of 2023. So what you're seeing here on the screen is the presentation that STEM gave to a conference. I believe the conference was held by Goldman Sachs, but it was a clean energy type of conference, and this was in January, so not too long ago. And this has a little bit of discussion around Q4 2022, which is why I want to explicitly call this out. The important thing to note, and this is titled on their slide, they're continuing to highlight that they have an AI-driven model, and I'm expecting them to get a question by analysts tomorrow in terms of, what does AI mean? Are we strictly talking about different algorithms, or is it something a little bit more in line with like a chat GPT type of situation where there is going to be a lot more information overload? And I think that this is going to be important as you continue to see additional information come up in AI-driven spaces, as well as how this is going to correlate, what's the moat surrounding this technology, recognizing that companies like Fluence, which announced earnings last week, announced very strong earnings, and they do not tout their software as necessarily AI driven. And then there's Tesla's auto bidder technology, which I don't believe, but feel free to correct me in the comment section down below, that they highlight as being AI driven. So that's some of the information that I want to walk through. As far as the information here, just keep in mind that this is STEM's information. I'm simply reviewing this information, and I'm by no means a financial advisor. I'm just some guy on YouTube, so do your own due diligence and don't consider this investment advice. So it's important to note Q3 earnings, when they came out, they were very, very strong. We have a video out there. I may throw that in the link right here. But it's important to note that Q3 was a very good quarter. And what I want to talk about on a go-forward basis is, are they going to call out in their slide deck, similar to what Fluence did, some of the components of both bookings as well as revenue in relation to the short report? So remember that the strong bookings number and the strong backlog number both came into question from the short report, highlighting that it is very easy to get out of these contracts. If that is the case, I consider that to be very worrisome, because these are two components that I have continued to tout as being a very strong component of their business, that they continue to have this strong backlog. However, if those clients or prospects can essentially quit at any point in time, similar to what may have happened with the ERCOT deal, I think that that is a huge issue there. The other thing that I want to talk about is this contracted annual recurring revenue, or total revenue. How much of this is being attributed to software, especially some of those legacy deals that are continuing to roll over into this deal set here. Both of those questions I expect to be asked tomorrow. If not, I will be a little bit disappointed if they are not addressed, because I think both of those components are very important to STEM's business model, and especially to their current valuation, which went up another 8% today. Depending on the earnings, could go up even more. So this is all Q3 information. It's important to note Q4, they have highlighted their full year guidance here again for 2022. Remember that Q4 is supposed to be between $145 and $220 million in revenue. On a bookings perspective, they are going to be over 1 billion. That information is available on this next slide, where you can see that total backlog or the total bookings is supposed to be above 1 billion. The expectation there is it is still going to be higher than that, despite the fact they are getting rid of a large contract, and I believe that this is the ERCOT deal, which again, I would have expected some additional news around that, so expect some additional commentary around this. If you think about it, 130 million, that's 13% of their total backlog right now. So why is that getting pushed? What's some of the commentary surrounding that? And again, for these backlogs on bookings, what does that actually mean? The second component here is they are continuing to expect to be EBITDA positive in the second half of Q2 2023. I'm wondering if that is cumulative or strictly in Q4 they will be. Remember, this EBITDA number means that they, generally speaking, don't take into account things like compensation packages by management. So that's something that I would watch there. This company has to have clear line of sight to profitability in 2024. I'm hopeful we get a taste of that in 2023. And then as I continue to work my way up, this revenue number, remember they're expecting that to be on the lower side, but there is some material differences between 140, 150 compared to 185 or 195. So if this is going to be in those upper ranges of the low end, quote unquote, then that's something that I want to watch. I'm glad that they're coming out with that commentary as early as they did, but I still need some additional information in terms of, is this going to drive 2023 revenues higher than initially expected? Because right now it continues to look very, very strong, but that 2023 guidance is going to be live or coming on the session tomorrow. So the key things that I'm looking for is revenue going to be, is it going to be $1 billion year in 2023? And they should have a good idea of what Q1 looks like, especially if they had a decent sized deal push from Q4. The second component of this is what does bookings look like and give us more context and clarity. And I also need some more information from that short report, some answers to some of the questions posed there, particularly as they associate with revenue, as well as bookings and backlog. If they can identify the two components there, I will feel a lot more comfortable, because keep in mind right now I have not purchased any additional shares. I have sold multiple covered calls, today included, since they issued that report. So this is something that I will continue to watch on an ongoing basis. However, it's not something that I actively want to trade without further adjustments or management. That being said, in the overall business model, in the space, am I bullish? Yes. Do we need to continue to see increased improvements associated with their financial performance? Also, yes. I think the Inflation Reduction Act and the continued government support for the subsidies, which whether or not you agree with the subsidies is a different question. The fact of the matter is they're currently there, and that should benefit the overall company on a go-forward basis. So those are some of the items I'm going to be watching. Please let me know in the comment section down below what you're looking for, but I will be covering the earnings here live once again tomorrow, and we'll be checking that out. Hope you'll join. Thanks for watching. If you made it this far, please leave a like and subscribe. Thanks. Talk to you later.